Hi, welcome to this shootout being done on September 10th, 2013 at 4 p.m. as the commodities complex looks up as of now. At the outset, I'd like to highlight two factors that played in the market's sentiments today. The Nifty breached the 5,900 mark at close and the Sensex at 20,000 mark. That means the Nifty rose by over 200 points today and the Sensex by over 700 points. This weighed on the sentiments as far as INR is concerned, currently trading at 64.03 to a dollar. It has risen by around 1.8% during the course of trade today from the previous Friday night's evening's close of 65.25. Now 64 is a strong support. If that is breached, likely to test up to 63.40 in the days to come. Resistance now at 64.80 to 65.25 zone. So as of now, during the course of the trade today, the INR, which rallied sharply higher today, played on the sentiments of all the prices of MCX commodities, as was evidenced by the opening rates at 10 a.m. this morning. As the markets opened today, we saw a sharp gap down open, basically because the INR had appreciated by then. Now I give a roundup of the individual commodities as I see it now. First we talk about gold. Gold is now trading at the 1372 mark, down in dollar terms by around $11 to $12 today. Strong supports are now seen at the 1364, 1360. Very strong support on a weekly basis is seen at the 1350 mark. A close below 1350, as and when it happens, if it happens, is likely to see further sharp downside up to 1320, 1300, $1280. Resistance is now seen in the band of $1390 to $1400 now. As far as MCX gold is concerned, it's down by about 400 rupees today, trading now at around the 31,130 mark. Support is now seen at 31,000 and below that up to 30,850. Resistance is now seen at 31,520. Expect to come down mainly on account of any further strengthening in the INR up to the support levels. Silver is now trading at around the $23.30 mark. It is broken below the strong support of 23.5. Current supports are at 23 and break below and a close below 23 could see levels of up to 22.80 and 22.40. Resistance now is above the 23.80 to $24 mark. On the MCX Exchange, now trading at around the 53,150 mark. Strong support is now at 53,000. If sustains below 52,900, could test 52,700, 500 and 300. Resistance is now immediate resistance is seen at 53,600 and on a weekly basis above the 53,950 mark. Trading in bullions is advised to go slow, especially since the strengthening of INR is having an impact, as also any dollar weakness, as has been evidenced during the course of trades today. Remains to be seen if the trend will continue in the evening session after COMEX opens. Any further dollar weakening could further bring down the prices alongside the INR strengthening. Sell on rises is recommended for bullions as of now as an intraday play. Next we come to crude oil. Crude oil is now trading at around the $108.60 mark. Syrian crisis is still weighing in the markets, although the G20 summit which took place last week did not have any impact as far as US is concerned, as they were not able to convince the partners for a short strike on Syria, with Russia backing out at the last minute. Now in dollar terms, 109 to 110 is a strong resistance. Next upside could be seen on a close above $110 up to 112 and 114. On the downside, support is immediately seen at 108. A break below 108 could see 107, 106 and 105. On the MCX Exchange, now trading at around the 6985 mark. Open gap down this morning on account of the strong INR. Opened at around the 6960 levels. Hit a high intraday of 7038 and now trading at 6985. Resistance is now seen at the 7052 mark. The next upside on a break above 7052 and a positional basis, a break and close above 7100 will take it to higher levels. On the downside, however, a close below 6960 would see 6930, 6900 and even up to 6850 or 6800 cannot be ruled out. As far as natural gas is concerned, it's now trading at around the 233 mark. 235 is a pivot. If sustains about 235, 240 could be tested. On the other hand, if it sustains as is now below 235, could test supports at 231 and 229. Close below 230 could test even up to 225. However, in dollar terms, it is holding at around the $3.50 mark. We are not talking about the base metals. Positive manufacturing data from China also weighed on the sentiments as far as base metals are concerned. Copper is now trading at around the 471 to 472 mark. Open gap down on account of the strength in INR. Tested a low of 468.50. Current strong support is seen at 468. If sustains below 468, likely to test 466, 464 and 462. And resistance is now seen above the 474 to 475 mark. Next positive move only on a close above the 475 to test 478 and 481 in the days to come. However, as of now, we recommend a sell on rises so long as 474 to 475 is not breached. A break below 468 could see further downside up to 464, 462. Nickel is now trading at around the 888 mark. Overall weak as it sustains below the 890. Resistance is now above the 900 mark. If sustains below 888, could test 880, 870 and 860. Lead looks weak at around the 136.5 mark. All set to test the supports of 135 to 134 levels. Resistance is above the 139 to 140 level. Next upside only on a close above the 139, 140 mark. On the other hand, if it sustains below 137, could test 135 to 134. Zinc is now trading around the 119 mark, looks to test the support of 118 and immediate resistance seen at above 121.40. Aluminium also trades weak and looks to test below, if it sustains below 114 to test up to 112, immediate resistance above the 115.5 mark. Overall, all said and done, the commodities complex are going on the downside mainly on account of the strength in INR during the course of trades today. In the coming day also, INR could hold on a stronger wicket and a break below 64 could test up to 63.40. If that happens, we can see further weakening of the commodities complex across the board. Of course, the dollars, in dollar terms, gold and silver are also trading lower today. That is accentuating the decline. Today, there is no data as of announced from the US COMEX markets. Next week, we have the Fed meeting coming up on September 17th and 18th, which is likely to have a major impact on the shape of the US dollar and the overall commodities complex. Markets are expecting a gradual reduction in stimulus. Also, although a portion of this has already been factored in by the prices in the international markets. For further updates and commentaries and live intraday calls, please visit our website at www.akshayaship.com or write in at lotusadvisoryservices@yahoo.in. Have a safe trading day. We hope to give our next presentation at noon on Wednesday, September 11th, 2030. Thank you.